I'm Dr. John Gartner.
And I'm Dr. Harry Segal.
And welcome to this preview of Shrinking Trump.
On this week's show, we talk about the economic meltdown. But we don't just look at stocks and tariff policies. We talk about the way in which this whole ordeal, this self-inflicted economic crisis, is actually an expression of Donald Trump's psychopathology. It is not an economic act that comes out of rational thinking or strategy or some kind of economic plan that's going to restore something. It is literally an expression of his mental illness.
Yeah. It also reaffirms what James Carville said. It's the economy, you stupid, demented, malignant narcissist.
And it looks like he's crashing not just our economy, but the world's.
Yeah. In addition to that, we talk about immigration and we talk about the resistance that we saw this weekend.
Yes, and we have a very special guest, and we'll leave it to you to discover who it is.
The bond market is actually very difficult to understand. I have to admit that I didn't feel like I understood it well enough until I prepared for this show. Okay. And I've spoken to financial, consultants at a high level, and they say, hey, listen, some of these guys who run the stock portfolios don't understand the bond market. But here's a way to just kind of think of it, more simply. We live on a sea of debt, right? Our American prosperity and security, we're like sailboats swimming on a giant ocean of debt. Okay, $1.8 trillion a year in bonds. Okay, that we put out. Now, the thing about the bond market, and this is what part's a little bit confusing, is the higher the price of the bond, the more people want the bond. Think of it as supply and demand for a minute. Okay, if a lot of people want that bond, right, they don't have to pay a lot of interest because there's a lot of competitors. People will buy it at 4%, right? But if there's not a lot of competition, if people really don't want the bonds, then they're going to have to offer a more attractive premium, right, to get those people. So they might have to offer 4.5%. Okay. Now, there's a number of reasons why they might have to offer that greater percentage. One would be because people think inflation is coming, and so they don't want to lock themselves into a low interest rate. So that's one reason why the interest rate might go up. But another reason that the interest rate might go up is a risk premium, where people are starting to think, well, wait a minute, is this really a safe investment? That's why third world countries have to pay way higher interest rates than we have to pay on our treasury bonds because they're riskier. That's why corporate bonds have to pay more because they're riskier. As you said, Harry, the traditional safe harbor, not just for individual investors, but corporate investors, institutional investors, and also sovereign nations.
Exactly.
Right? Has the go-to safe investment has always been U.S. Treasury bonds. And in fact, the trend that we see is when the stock market goes south, the bond market goes up because people are fleeing to safety, right? They're fleeing to safety. That didn't happen this time. Let's take a look. There was a sell-off in U.S. bonds, and the dollar raises questions about our safe haven status. As the fallout from President Trump's global trade war spreads, investors are fleeing what is typically seen as the safest corner. A sharp sell-off in U.S. government bonds, in U.S. government bond markets and the dollar has set off fears about the growing fallout from President Trump's tariffs, raising questions about what is typically seen as the safest corner for investors during times of turmoil. Amid the tumult, other markets considered alternative safe havens to the United States have gained. Yields on German government bonds, which serve as the benchmark for the Eurozone, fell on Wednesday, indicating strong demand. Gold prices rose too. In social media posts on Wednesday, the former U.S. Treasury Secretary Lawrence H. Summers said, the broader sell-off suggested a generalized aversion to U.S. assets in the global financial markets and warned about the possibility of a, quote, serious financial crisis wholly induced by the U.S. government tariff policy. Quote, we are being treated by global financial markets like a problematic emerging market.
And what happened yesterday was the market rebounded and the bond sell-off stopped. However, here is the headline from the New York Times 10 minutes ago. This is Thursday, folks. Investors' mood sours after a euphoric day. Bond sell-off continues.
Now,
bond sell-off is a catastrophe. It never happened.
Never happened. And think about this, Harry. If China really wanted to screw us, which they do and which they should, okay, they could put tariffs on us, sure, yeah. But you know what would really hurt us? If they just sold a few $1 billion of their treasury bonds. Because they are the largest, after the U.S. Treasury, the largest holder of U.S. Treasury bonds. One of the people who has been speaking out, who is really one of the great champions and has been from the beginning, is Jamie Raskin. A lot of people may not know, but Jamie Raskin has a history with our movement, with Duty to Warn. We connected with him when he was a young congressman. He was like 3 months into office when we connected with him. He won his first election in 2016. And the reason we connected with him is, as a constitutional lawyer, he recognized that the Constitution had, in the 25th Amendment, a description of a body that could be set up to evaluate the president, except Congress never set up the body. It was in the Constitution that a body would evaluate the president, but there was no body. So he proposed that they create one. It was HR 186. Now, of course, it was motivated by the fact that Trump was crazy, and there should be some mechanism for removing him under the 25th Amendment. And the suggestion was that there be psychiatrists and psychologists and regular MDs on that panel. Of course, it didn't pass, but that's how we formed an alliance with him. And I will tell you that, so we had him speak at our Duty to Warn meeting. We gave him an award. I had learned about this from somebody who was organizationally more sophisticated than us. As a way of kind of winning him as an ally. If you give someone an award, it kind of means something to them. So we created this award that didn't exist. We gave him our first annual Duty to Warn Legislators Award. It was the first and the last. But we got this really cool, like, etched glass thing. I paid like $300 for it. I think he had it in his office for a little while. Now it's probably in his garage. But but when I went to his office to talk to him, this is the reason I want to mention this story. He had read, not only had he read The Dangerous Case of Donald Trump and read my chapter, when we sat down to talk about it, we talked for about half an hour, which is a lot of a congressman's time. He had underlined the book very carefully, like a real student. He asked a lot of questions, informed, intelligent questions. So he really got what it meant that Donald Trump was a malignant narcissist. Now let's hear him at the resistance rally describing what is the most important public health problem that we have in America.
The NIH, the crown jewel of bioscience, where despite all the purges and all the firings, they're working every day to cure cystic fibrosis, multiple sclerosis, breast cancer, and that most deadly disease of our time, malignant narcissistic personality disorder.
I think the audience got it. And it is the most deadly disease of our time.
Right now it is.
Exactly. Can't the NIH cure that?
No, the person has to want to be cured. So that's our preview of this week's Shrinking Trump. You can find us on the Really American Network. The show drops live streamed every Friday at 3 o'clock Eastern time. You can search for us on YouTube. You can also hear audio versions on Spotify and Apple Music and anywhere you find your podcast. We're there. So please join us. We look forward to seeing you.
See you there.